Welcome back everyone to the Money Control live stream. You are watching Markets with Santo and CJ. I know I'm smiling, but believe me, inside I'm crying. It was supposed to be Monday blues, but it has turned into Monday mayhem on Dalal-Street, with all shades of red visible anywhere you look. Right, Santo?
Yes, I agree, CJ. So on the show today, we'll be talking about what's the factors behind the 1,000-point cut in the Sensex today, what's moving stocks like NTPC, Tata Power and Varun Beverages.
Yeah.
And at the end of it, we will also talk about what does the VIX, the volatility index, tell you about the direction of the market right now.
Yeah, talk we will, but first off, let's take a status check on what is happening in the market. Both the Nifty and Sensex are down around 2%, deep cuts on the index right now. IT and banks are leading laggards on both the indices. I mean, after the weak performance of Infosys and HDFC, it seems that the market has given up all hope on earnings. And there was no place to hide. Small caps and mid caps also saw deep sell-off in Nifty mid cap 100 and Nifty small cap 100 indices falling over 1% each. So things are not looking very pretty this Monday morning.
Yes, indeed, CJ. But of course, there were some places to hide and people were hiding there. I'll come to it in a bit. But in the meantime, very clearly, the sentiment has taken quite a bit of a beating, and it's mainly to do with the disappointing set of numbers from HDFC Bank and Infosys that was the immediate trigger which caused the big sell-off in both IT and banking stocks. Since then, things never really recovered. You've seen continuous pressure one way. Besides, you have the bigger macro factors as well, both inflation and the weakness in the rupee. There has been a couple of factors which have been weighing on sentiment for quite some time now and don't seem to be going away anytime soon. And typically what happens, CJ, during a phase when the rupee is weak, you see foreign investors pull out more money than they would put in. And already, since the last 4 months now, they've been sustained sellers, and because of the weak rupee, it doesn't look like they're going to change their minds anytime soon.
Yeah, it doesn't look like anything can convince the FIs from, selling in this market, even though thankfully our domestic investors, both the retail side and institutional investors, have been supporting the market so far, but things are not
have the retail investors to thank for, I would say.
Okay, I don't know if they are thanking us or maybe they are missing out on an opportunity. Let's see. That said, not only the indices were seeing major moves today, even at stock level, we had some brilliant moves happening across the board, right, Santo?
Well, CJ, brilliant moves on which side actually?
Brilliant moves on both the downside and upside.
I think it was more of, downside than the upside, because you had almost 2 stocks falling for every one that game.
Absolutely, yeah. But which is not that bad. I mean, we have had days when 5 to 6 stocks have been falling for, only one gaining. So not that bad, I would say. The breadth is not that bad.
Okay, so let's take a quick look at some of the stocks that were in the limelight today. So starting with Nestle, this is one stock which managed to hold ground in a weak market. Now, what the general positive about Nestle, according to Money Control Pro, is that it's got a portfolio which is largely skewed in favor of the urban market, and urban market has been doing better than the rural and the semi-urban market. So that is one of the
because of the reopening.
That is one of the reasons why Nestle has been in favor with buyers over the last couple of trading sessions. But also bear in mind that the stock is quite expensive. It's trading at about 88 times its earnings for the previous 12 months.
Which basically means that if I pay 1 rupee today, I'll recover all of that money in 88 years or something like that.
That is the rule of
insane.
That is insanely, but that's the way FMCG stocks are. They're always going to be expensive, and even if the companies do come out with a good set of numbers, what it does is actually push the valuations even further instead of actually bringing it up.
But Santo, I mean, you have to consider not only are the valuation expensive, but it's not that the growth is very great. I mean, even for Q4, analysts are only predicting about, excuse me, about 10 to 12% of growth. So which is not really something to really write home about.
You just said that, we were talking about the place to hide. Right now, FMCG is a place where everyone is hiding. They're not really concerned about making money, but they're figuring out ways how to lose least possible money. The other stock is
So pessimistic.
SBI Life. Now, the stock has also been firm in a falling market today. Broking house MK had come out with a report on the insurance sector in general. Now, life insurance stocks have had a tough time over the last 18 months or so, understandably so, because of COVID deaths and the huge number of claims which were made on insurance companies.
Absolutely.
But now that thing is slightly abating, but still the market seems to be quite pessimistic on insurance stocks, life insurance stocks, which according to MK seems to have been a little overdone. What the market seems to be ignoring is the strong growth prospects and also the strong franchisee of many of these companies.
Yeah, but let's not forget that there is a big overhang on the horizon for life insurance companies, and that is the LIC IPO. I mean, you talked about it earlier when we were, talking behind the scenes, and how the IPO has actually been weighing on life insurance companies for a long time now. And hopefully, as and when it comes, maybe that when that is out, investors will start relooking at insurance. But at this point of time, it seems we are just, restricting ourselves to 1 or 2 days of positives, while the overall picture looks a little bit negative.
ITC is the third stock. Again, the
meme stock on your portfolio.
Yes. So the tobacco segment, which is the main revenue driver for ITC, that is less resistant to inflationary trade. So people might give up on soaps and shampoos, but I think they still can't do without their smoke.
People are going to do what they're going to do. Yeah,
yes.
You can't
and besides, the hotel segment is also looking up quite well, and that's the reason why investors are flocking to ITC at this point in time. So
but one thing I'll say about ITC is that it generally tends to move always contrary to how the overall market is doing.
Yeah, the negatives about ITC still continue to remain there, and its FMCG business will continue to hurt from the same factors that are hurting other FMCG companies. But for now, ITC seems to be in a good spot. It seems relatively undervalued, or at least the market thinks that it's relatively undervalued compared to the...
Just one side note here though. As and when the day comes and the market actually turns, I'm pretty sure that ITC is going to look the other way around.
Possibly. HUL also a broad-based portfolio here, which makes the stock a better bet in these times when there is a general slowdown in the FMCG sector. So that's one reason why possibly investors are finding the stock attractive. But
I'm surprised that you mentioned HUL, given the stock has not been performing at all for the past 5-6 months.
Yeah, but I think it's serving as a good hiding spot at this point in time, something that won't cost investors money. So just park your money there.
Take note, guys. Today Santo is all about hiding spots. Okay.
Yes.
Today he's just providing you places.
See, investing. I think you go by the theory that attack is the best form of defense, but I think the reverse also works. You also need to defend well, and this is
this a Mourinho versus Guardiola argument that we are
at
having?
this point in time, you need to protect your capital. Trust me, it is very important at this stage. HUL again likely to be affected by rising input costs. There's no escaping from that though. The last stock on my radar is Britannia Industries. Again, according to Moneycontrol Pro, the company has got a good premium portfolio. That's the biggest advantage, which puts it in a better position to be able to weather the inflationary trends. Also, the company has invested in expanding its distribution network, which means that it's moved into newer areas and has been able to grow its sales.
Okay, so since Santo was all about where to hide, I will talk a little bit about where the momentum is in the market, both on the downside as well as on the upside. So Tata Powers, we talked about the great deal that it had in the renewable energy business in the morning. The stock was down 6% today.
CJ,
Why?
Yeah, I'll tell you why.
Why?
Because the saying is, buy on rumor, sell on news. So what was driving the stock? Probably that news became public and people are just getting out of the stock.
Potentially, but also because brokerages are saying that the deal's valuation is so rich that the stock price has already factored in all of the upside from that deal. So right now, renewable energy business was one of the major driving factors for Tata Power over the past 1 year. One day there will be a deal happening, there will be value unlocking, and investors will finally know what the renewable energy business is worth. That has happened. It's now out of the way. And therefore, analysts do not see further upside. Now, all the upside will depend on the other businesses of Tata Power, which are probably not looking as great as the renewable energy businesses. Next up is NTPC. Okay, so there's always this old adage, right? Somebody else's gain is somebody else's loss. Tata Power's loss is NTPC's gains. IIFL Securities believes that NTPC right now is a better renewable energy bet than Tata Power, given that it provides better upside has attractive valuation and a very attractive dividend yield as well.
Just some perspective here. When you get time, just pull out the 10-year chart and see how much money the stock would have made for long-term investors. So I think if there is a good run in the stock, probably it's time to take your money and run.
That said, in a market where we can't even know what is happening tomorrow, it's better not to look at the long term at this point of time.
Yeah, clearly, yeah. What kind of a market? I mean, clearly PSU stocks are the flavor of the season.
Don't be so condescending towards PSUs. Don't be so condescending, my friend. It is up 3%. NTPC is up 3%. The top gainer on Nifty today. PVR. Okay, so last week it was looking hunky-dory for PVR. What's with the advance booking for KGF Chapter 2? You know, all those movies that are coming out, blockbuster hits. Today the stock is down 4%. And the main trigger, it seems, is largely because COVID cases are rising in the north, especially in Delhi. And that is rekindling fears that we could see resumption of some of the restrictions that were placed on multiplexes in the previous 2 waves. So that is one stock to counter to really watch out for. Mindtree, okay, the company's earnings are going to come out after market closes today. The stock was on 5%, largely taking cues from what has happened with Infosys. I mean, Infosys has basically reduced the hopes of all the other IT companies into ashes. Like, people are assuming that the worst has happened right now, and the stock was suffering because of that.
Another thing for IT companies, CJ, is that, you know, with offices having reopened, you know, the travel is also bound to go up.
Yeah.
The travel is again one of a major component of expenses.
Yeah, expenses are going
for
to
IT
go
companies.
up. Yeah, absolutely.
Already you have high attrition and then plus these other expenses. So margins looking to be under pressure. And because the overall market outlook is very gloomy, nobody is suddenly talking about the robust demand pipeline anymore.
Yeah, I mean, but that is something that I would really, you know, suggest that people do watch out for, because sentiment can turn like that. And
yeah, it turns on a dime.
If the commentary comes out to be really great and the guidance comes out to be really great for FY23 on the revenue front, I mean, this 5% decline could reverse like anything, you know.
Yeah,
so that is very much
possible.
possible.
Of course.
Lastly, Varun Beverages. Okay, stock is up over 2% today, and investors are betting that soft drink sales are going to surge this summer. We already know we have had a very, very hot summer. Not only here in, you know, Mumbai, but in North India, in other parts of India, temperatures are soaring. And this is happening at a time when people are going out, right?
Yeah.
And when people are going out and temperatures are soaring, what do you need? A cola.
Exactly.
A soft drink.
And you also need cola to mix in other beverages as well.
Okay, Santo, we don't know about that. But that said, the thing is that Varun Beverages is a major distribution partner for PepsiCo. So if soft drink sales go up, which basically improves the outlook for June quarter earnings for Varun Beverages. So that is something that I really watch out for going ahead in the coming sessions.
So a quick check on the market before we move on to the next segment, where for a change CJ is going to enlighten me on something. But let's look at the Sensex in the meantime. Index is down close to about 2%.
Yeah.
It's never really recovered from the early wave of
There
selling.
are no signs of recovery at all, it seems like. We're going to probably end around the day's low. Or the low point of the day on both the Nifty 50, Sensex and even the mid-caps.
Mid-cap stocks somehow seem to be doing slightly better. The Nifty mid-cap index is down just about a little over 1% there. So I think a lot of new investors are still convinced about these mid-caps, and they think that
Santo, I want to draw your attention. Look at the outperformers today. Coal India, NTPC, Indus Towers. These are the stocks that are outperforming, and they are going totally against the trend right now in the market. And investors are probably seeing a shift in market momentum towards a lot of these PSUs and beaten down stocks which were not really fancied earlier in the year by investors.
Well, there will be trading tomorrow as well, CJ. So we'll see about that.
We'll see about that.
In the meantime, quick look again. The Nifty is down a little over 300 points. The Sensex is also down close to about 1200 points. IT has been the biggest loser of the day. Mid-cap stocks have done comparatively better. So tell me, CJ, you were going to speak about.
You were very kind with that introduction of yours.
I'm always kind, CJ.
Yeah, I do actually want to draw your attention towards something, not only yours, but even our viewers, and that is the volatility index, the India VIX. The index soared about 12% in today's trade. I mean, we can expect that when the market is falling about 2.5%, volatility or the uncertainty level among investors will always rise. And the volatility index is nothing but a sentiment indicator of that sort. It's a fear gauge, as they call it. So, you know, and today's move is the biggest that we have seen in 6 weeks. I mean, probably the biggest since Russia invaded Ukraine on February 24th.
Isn't it natural when markets fall, people get fearful, don't they?
They do, but the sort of move that we are seeing tells me that there's something more to it. After the spike in volatility index to about 30 odd level, 30 points level, following the invasion of Ukraine by Russia, we had seen a steady decline in this index over the past 2 to 3 weeks, and it had just last week, before we went off on the extended weekend, it had come down to levels of about 15 to 16, which are generally a very good level. I mean, if you talk to technical analysts, it's a comfort zone for the market, right?
Or a complacency zone, as I would put it.
Yeah, probably. Actually, that is how I would want to put it. That is probably a complacency zone in this case, because today, in today's move, we have suddenly seen the index spurt towards the 20 level, which is actually not a very great place for investors to be or the market to be if you're bullish, right? And along with that, you couple this with the Nifty put-call ratio. So Nifty put-call ratio is also an indicator of the market sentiment. When people are buying more puts, basically that indicates that they are more bearish on the market. When people are buying more calls, that indicates that they're more bullish on the market. If they're buying more calls, this ratio tends to go below 1 and towards 0.5, 0.4, right? When they're buying more puts, it will go towards 1 or even beyond 1 in some instances. Right now, the Nifty PCR ratio is of 0.7.
Isn't there some bit of contradiction there? You're seeing the fear index jump,
exactly.
and so probably the people buying the call options are different from those creating.
Finally, Santo, you're catching my drift. So the point here is that today's rise in index, in the volatility index, when you couple that with the PCR, it shows that there is a lot of room for bearishness in this market.
Right.
We saw a very dramatic recovery from about 15,500 levels after the Russia-Ukraine situation escalated, and towards around 18,200, and since then we have been steadily declining, not a very rapid decline, but today we saw a one-way move, right? And it is possible that going ahead we may not see the same intensity of selling, but we may see gradual decline till the market again finds an equilibrium going ahead. So yeah, that is what I really want to bring
Whether it's a fast decline or a gradual decline, I think we're going to finally get lower and
for the
lower.
time being, it seems so. But that said, we have wrapped up the day's action. But what are you going to look at, Santo, tomorrow morning when we come
Well,
back?
clearly no major earnings there, so market would largely continue to be driven by the sentiment in international market. And
Yes.
a quick check on the index before we go. No change really there. The
Still at
Nifty
days
Bank
low, yeah.
is down by about 641 points at this stage.
Actually, we are seeing a little bit of recovery in the market. The index has come off from about 2.1% down to 1.6%. So the 3 p.m. move is probably making its mark
Some
again.
bit of covering of positions there.
Yeah, possibly.
Nifty
that
down about close to 290 points, so not
Yeah.
much of a change there also. Sensex is down about 1100 points. It's clearly you're seeing the markets under pressure at this point.
Absolutely, and it looks like we are closing in the red. That is definitely certain, right?
No mistake.
So anyway, on the horizon, we will definitely have, as Santo mentioned, the global markets will definitely be something to look out for. The US market action will be key. It will be resuming trading after Friday's, a closure because of Good Friday. So far, it looks like that market is also going to start on a weak note. Dow futures were down as we, came live. So that is something to watch out for. And several of the Feds or US Federal Reserve's FOMC member, which is basically the panel that sets rates in the US, interest rates in the US, they are going to be speaking later tonight. So a little bit something to look out for, given that we could see commentary there on possible interest rates hike in the June meeting and on the inflation print that came recently.
Well, with that, it's a wrap of this edition of Markets with Santo and CJ. Thank you for tuning in, and for more market updates, please check out moneycontrol.com and also Money Control app.
Yeah, and please post your feedback on the comment section below and also on the links at the bottom of your screen. And do not get too down and out about today's action. We will see you tomorrow morning sharp at 9 a.m. Till then, take care, stay safe. Thank you.
Thank you.